What's driving the semiconductor trade? Is it the fundamentals around supply chain issues, or is it getting caught up in this more big macro kind of situation tied to interest rates?
Yeah, no, well, it's both, right? I think the shortfalls yesterday where it was caught up in the broader like market concerns about rates and everything else, and obviously semis took a bit of a bath yesterday. I think broadly though within the industry, like investors are they're hearing all these news flow about obviously supply constraints and strong demand and everything else. Fundamentals have looked very, very good. I mean, numbers have been going up, for the last like several quarters by pretty material amounts. And yet what we've actually seen more recently is even as the numbers are going up, the multiples are coming down. And the stocks, for the last couple of quarters haven't done all that much relative to the improvements and the apparent improvements in the estimates. The reason is investors are worried that we're getting, close to peak. Anytime you hear news about supply constraints and lead times like stretching out to massive levels, people worried about the sustainability of that demand and what it potentially looks like on the other side. And I mean, that's kind of the heart of you mentioned a little bit some of the work that we did today, and you mentioned the NXP downgrade. This is actually a broader industry piece. We were looking at the potential semi shipments versus end markets for a variety of markets, automotive and PCs and industrials. And while everybody's still saying shortages are still there and lead times are still like very long, you're starting to see some like points of evidence that like some of the semiconductor shipments relative to where the end markets are actually running, as you said, hot. They're actually running quite a bit higher than what the end markets would suggest. And then that brings like further cyclical concerns once we get to the other side of this, whenever that happens to be. Like, I don't know when that is, but when we get to the other side, people worry, that we'll have that cyclical downturn that conceivably could be just as strong as the upturn we're seeing right now, given the supply and demand dynamics and how those play out.
So Stacey, I mean, what we're showing through right now, and for listeners on SiriusXM, we've been cycling through a number of charts showing everything from AMD to NXP Semiconductor to Micron to Qualcomm to Intel. What's interesting about that, Stacey, is all of those companies dabble in different types of chip markets. Is there a specific part of the semiconductor industry that you think leads the way out? Is it memory chips? Is it going to be, wireless or cellular related chips? Is it going to be gaming chips or graphics chips? What types of companies do the best here in the coming 6 months?
So a few things, and your first point is very interesting. We've seen shortages and supply issues in the sector. We've never seen anything like impacting the entire industry broadly across every sector. So this is new. We're in uncharted territory, because we've never had a potential like global catastrophe kick something off like we've had this time. So we're, this is a little bit uncharted. In terms of the end markets where I am, at least where I can get the most concrete evidence that maybe overshipment such as is happening, in particularly automotive and PCs. And again, you can actually do the work. I can actually get decent data on auto or PC semis, and I can get data on end market shipments, and I know how to subtract. And you can actually like demonstrate it pretty well, like you're seeing over shipments there. Other end markets like in industrial and things, they're a lot more opaque because industrial, for example, is not an end market. It's hundreds of end markets. It's very difficult to track. But some of these things you can see. In terms of where I would expect weakness to show first, memory, we're already starting to see it. So we're starting to see memory pricing starting to come down. Micron reported last night we're starting to see some of that. I'm quite nervous about PCs. PCs have been incredibly strong all through COVID. We're running notebooks right now. We're running 50% higher than they were running pre-COVID. I think notebook CPUs are running 30% higher than notebook PCs right now. So it gives you some idea of magnitude. And we're already starting to see things like Chromebooks and these low-end notebooks starting to roll. So that's, it's starting there. Automotive, we'll see. And again, like the NXP downgrade today, it wasn't really a company-specific call. It's just they have 50% of the revenue in automotive. And I'm getting increasingly nervous just sort of looking at the story that the data is telling me. I'm not suggesting that there's going to be any type of shortfall in automotive anytime soon. And I think shortages could maintain for quite a while. But at the same time, the magnitude of overbuild within autos starting to look pretty impressive. We'll see what that looks like as we get into next year.
Stacey,
but in terms of end markets, probably PCs is where I'd be watching first. We're already starting to see some signs, and then we'll see if it snowballs from there.